Hello everyone and welcome to the quick concept revision for Ind AS 108 operating segments. This is by and large a disclosure standard and there are two important components in this standard. First is identification of reportable segments and second is preparation of segment report. Obviously there is a lot of theory that comes before you do all of these items. Having said that, the identification of reportable segments and preparation of segment report have been tested in the past multiple times in your exams. So let us get started. Now the focus of Ind AS 108 is on something called as operating segments, and these are segments which are identified by the chief operating decision maker. Chief operating decision maker is considered to be ultimate decision making authority in the organization when it comes to taking operating decisions, like the CEO or the chief executive officer or the COO, the chief operating officer. These are CODMs, the chief operating decision maker. So what we try to do is we try to figure out the individual, or let us say a board or a body which understands the business the best, that is a CODM. What does CODM track in a business? Well, that should be the basis for what an investor sees in the segment report in the notes to accounts. So the CODM is the ultimate operating decision maker. CFO is not the CODM because he is the ultimate financial decision maker. Even a panel who is like a committee who is responsible for making the chief operating decisions can be taken as a CODM. So what are the operating segments? Operating segments refer to segments which are capable of generating revenue. They might be in the startup phase and they are not generating revenue, but they just can't be cost centers like administrative offices. They should be capable of generating revenue. Second, they should be assessed, reviewed separately. Their performance should be separately reviewed by the chief operating decision maker for performance evaluation or for the purpose of resource allocation. And third, discrete financial information should be available. So if these segments are such where you do not have discrete information, separate information about the cost revenues, then there's no point showing them as separate segments because you'll not be able to show anything in the segment report. So these are the three things that you need to remember for the segment to be shown as an operating segment. It has to be capable of generating revenue. It has to be reviewed separately by the chief operating decision maker, and discrete financial information should be available. Now it is possible that the chief operating decision maker is operating on an Excel sheet, and for big companies like Hindustan Unilever might have hundreds of different products or different segments. Can we show all of these to the investors? Well, that will burden investor with a lot of information, and hence the standard allows you to aggregate these operating segments by giving certain operating segment aggregation criteria. So 5 criteria are given where we say that if economic characteristics of segments are broadly similar, you can aggregate them. That is, if the natures of products and services are similar. So if there's Tata Motors which has multiple segments, like it might be selling economy cars, it might be selling luxury cars, it might be selling trucks, etc. So we will say the nature of product should be similar. Like you will say that passenger vehicles are similar, whereas commercial vehicles like trucks are different. Or the nature of manufacturing process has to be similar. The type of customers should be similar. Like for example, customers of Jaguar and Land Rover will be different from the customers, let us say, of an economy car, and hence the nature of customers. Jaguar and Land Rover can be aggregated into a single segment, economy cars into a single segment, and let us say commercial vehicles into a different segment, let us say. So the nature of customers should be similar. The distribution network should be similar. Like Star manufactures content. Now it can distribute it through an OTT platform or a direct to home platform. So you can have different segments because the nature of distribution is different over there. And the last thing is regulatory environment should be similar. So for you to aggregate different products or different segments that the CODM is tracking, they should have similar nature, similar manufacturing process, similar nature of customers, similar distribution channel, and similar regulatory environment. If these are similar, then you can aggregate different segments into, so the CODM of Tata Motors might be viewing the sales for each car model separately. Now you can aggregate similar car models into a single segment if these criteria are met. So you started with the CODM, you went into their segment reports, figured out operating segments, and you aggregated similar segments. Now whatever are the similar segments, can you show that separately? Well, generally yes, this is important if they are reportable, that is if they are material. Now Tata Motors hypothetically can also manufacture bicycles. Now bicycles are not aggregatable with, let us say, cars or tractors or anything. So they might appear as separate. However, they might be very material in the larger scheme of things. And hence comes the concept of reportable segments. That is, you will show segments which are big separately, and for smaller segments, you can club everything into an others heading and show them as other segments. So which are the big segments? The standard looks at quantitative thresholds where it has three limits. It says quantitative thresholds, that is thresholds which are linked to a quantity or a limit. That is, first, the segment revenue should be greater than or equal to 10% of the total segment revenue, or the segment result or profit should be greater than or equal to the absolute of the combined segment profit or combined segment losses, whichever is higher. I'll again repeat, the segment result, that is either profit or loss, irrespective of the sign, should be greater than or equal to 10% of the greater of, again ignore the sign, higher of the absolute combined segment profit or the combined segment losses. This criteria is there only for segment profits, because profits can be positive or negative, that is, there can be losses. Revenue in general is also always positive, assets in general are always positive, and hence the problem does not arise. And third criteria is your segment assets should be greater than or equal to 10% of the total segment assets. While taking these thresholds, a few important points need to be remembered. That is, when you calculate segment revenue, you only take the, or whether segment revenue, segment profit or segment assets, you take only the operating items. Non-operating items like lottery winnings or non-operating assets like investments should not be a part of the segment assets or segment revenue. Remember, the heading of the standard is operating segments, so only operating items will be taken over here, non-operating items will not be taken. Second, it is possible that in certain segments you have an inter-segment revenue or an inter-segment item. So it is possible that one segment is selling to an external customer as well as selling to another segment as well. The segment revenue will include both the external as well as inter-segment sales. While pricing the inter-segment sales, we need to remember that these inter-segment sales will be recorded, at least for the purpose of segment report, at the price at which entity regularly prices its transactions in the inter-segment. So you don't need to apply a separate Ind AS 115 or anything over here. Inter-segment revenue should be a part of your overall segment revenue. So segment revenue will include the external as well as inter-segment revenue. Segment result, that is profit, will be calculated by taking segment revenue minus segment expenses which are allocable, which will also include inter-segment expenses, and hence the effect will kind of nullify. Segment assets will comprise of only operating segment assets. Now, segment profit calculation, you have to be careful to take on both sides the total profit or the total loss. You will ignore the sign. So you will take the combined of all the segments which has profit, combine of all segments which have losses, select whichever is higher. 10% of that is your materiality threshold. So the profit or loss, it does not really matter. If it is greater than the 10% threshold, then you will report it separately. These are the quantitative thresholds which are important. Apart from that, a few additional criteria have also been prescribed in the reportable segments. That is, if management wants to show a certain segment, even if it does not meet the quantitative thresholds, management is permitted to show that segment. A very important hidden adjustment over here is that the reportable segments that have been selected should cover at least 75% of the enterprise, that is external revenue. If the selected segments do not cover 75% of the external revenue, you will have to keep on adding segments till the time 75% of the external revenue is actually reported. And lastly, segments which have been reportable in the prior years, because they were material having a high quantitative threshold, will continue to be reportable in the current year as well in order to ensure comparison. So these are the three additional criteria. A few important points to note over here is when you are measuring these items, whether it is segment result, segment asset, segment profit, they will be done as per the method followed by the chief operating decision maker. So it is possible that the chief operating decision maker, let us say for his internal reporting, measures inventory at LIFO. Remember, LIFO is not permitted as per Ind AS 2 and it will not be shown as per Ind AS 2 in the inventory. However, if for internal reporting, for whatever reasons, the CODM is following LIFO, we believe CODM knows the business the best, and hence we will show the inventory as per LIFO in the segment report and then show a reconciliation between the inventory number as per the CODM and the inventory number in the financial reporting. However, you will show the numbers as per the method used by the chief operating decision maker for the purpose of your segment report. Again, segments which do not meet the quantitative thresholds will all be aggregated and shown under one single other segment heading. So there might be 20 segments in a business, out of which 6 of them are reportable. So you will show segment 1, 2, 3, 4, 5, 6, and for all the other 14 segments, you will say other segments and show the data within the other segments, ensuring that the reportable segments at least cover 75% of the external revenue of the company, which is sales to external customers. This is the important part involving reportable segments. Next, you go to the last part, which is involving preparation of segment report. Now, there have been 1 or 2 times where the entire segment report has come for around 10 marks. Remember, segment report has to be shown in the notes to accounts. This is one of the only places where the standard says that if you prepare the consolidated segment report, you may not prepare the standalone segment report. You have been exempted. This is not there for related parties or any other items. Further, if there's a company which is only into one segment, a note has to be given that the company operates in a single segment and hence no separate segment report is to be given. However, if a company has multiple segments, then it has to prepare a segment report. Again, there can be primary or secondary data depending on the importance. Like for example, you might have a primary segment which is based on business and secondary segment where you are just giving the broad level disclosures. So the detailed segment reporting will involve showing the segment revenue, including the breakup of external and internal revenue, then showing segment profit. You don't have to show the segment expenses separately. However, when you show the segment profit, this may not tally with the total profit which is shown in the profit and loss account, and hence you have to give a reconciliation. Now, why should it not tally, or what should be the reconciliation items? There will be certain unallocable items which are not allocable to segments, or there may be certain non-operating items, that is interest, which is financing in nature, or lottery winnings, or gain or losses on sale of investments, or there may be different policies used by the CODM as compared to the financial reporting, and there will be taxes. So these are the 4 reconciliation heads which you will have to show separately in order to reconcile the total of the segment result with the net profit of the company. So the first section will involve the P&L disclosures, where you will have the segment revenue, including external and inter-segment revenue, segment profits, including a reconciliation of the total segment profit with the profit appearing in the profit and loss. Now you go to the other information which is there in the balance sheet. So you'll have again segment assets with a reconciliation with total assets appearing in the balance sheet, segment liabilities with a reconciliation of total liabilities appearing in the balance sheet, and then we will look at other information which involves capital expenditure and depreciation, which has to be shown separately. Now this involves the detailed reporting. Now it is possible that you are operating in multiple businesses and also multiple geographies, and say you have given a detailed disclosure for the purpose of businesses. Then for geography, you can give a summary disclosure which can involve, let us say, segment revenue, segment assets, and capital expenditure. You don't need to show the bifurcation of the profit separately. Further, if there are major customers, you can show the sales in percentage terms to your major customers, so that major customer dependency can be seen as a part of your segment report. So all of this is the basic detailing which is to be given in case of a segment report. I hope this session has been helpful to you. A quick revision for Ind AS 108. Please let me know if you need any other help. Thank you very much. Wish you all the very best. Take care. Bye-bye.